Hi guys, it's Dale with the insurance. This week we're talking about something different. It's not auto, it's not home, it's to help the small business owner, which is phenomenal. And it's not just to help the small business owner, it's to help them earn money, keep money actually that they've already earned, right? And it's through tax savings. And we know that as a small business, you really need every single penny you can save. That being said, I will preface this with the article is very detailed because, as you could imagine, the law surrounding this act is very detailed. And I don't want to sound crude, but our government makes it very hard to digest tax code. Right? They don't make it easy to save money in terms of taxes, which, I mean, could be a good thing, right? Because those taxes pay for a lot of services for us, but could also be a bad thing because you worked very hard for that cash and you want to keep as much of it as possible. But let's jump into it. And once again, I would suggest that, and this is kind of an overarching theme, because of the complicated nature of this act and just tax in general, we obviously recommend that you allow your accountant or even kind of the accounting software that you use to make these determinations. But it's still good for you to understand what's behind the actual law and the deduction. Title of the article is Specified Service, Trade, or Business, what the new tax acts could mean to you. And this is the tax act that went into effect in 2018. It still applies now. It's just certain limits which they get into, and I mean it's down to the dollar. It's like $191,000.951 or something. It's very, very detailed. So the numbers may change each year on the limits in which you qualify, but the broad strokes are that, hey, if you are kind of a sole proprietor, you have a sole proprietorship or a partnership or S corp or LLC, you can qualify if you meet these certain limits and are in these certain industries to have a 20% deduction from your qualified QBI, qualified business income, which is a technical term that just means your net earnings, right? There are things that that are excluded, right? So like dividends, cap gains, things like that. That's the minutia, the net detail. The broad stroke is that, hey, if you are kind of you're a sole owner, right? Or you have an LLC, you may qualify for having a 20% deduction from your net profits for the year. So know that. And as you lean on your accountant or even the software that you use to do your taxes, just know that this could be available to you. So make sure that whomever you're working with to do your taxes, at least if it's not already included, at least you have a conversation with them to understand why it is not, okay? Because you could be leaving quite a bit of cash, 20% on the table, right? As much as 20%. Obviously, if some of your QBI is made from an industry that's not included, then you may not get the full 20%, right? But anything is better than zero, right? So hopefully this is helpful, guys. You can use it to save a little money. And we'll talk to you next week. Thank you. Bye. Hey guys, thanks for watching our video. If you enjoyed it, don't forget to hit the like button and subscribe to our channel for more awesome content. And if you really liked it, hit that notification bell so you never miss an update. We love hearing from you. We love hearing from our viewers. So be sure to leave a comment below with your thoughts on this video, and we'll see you in the next one.